Even after 3 straight years of double-digit percentage gains for the major U.S. stock averages, commodities are still drawing strong interest from investors. Traders are figuring out how to play oil as the U.S.-Venezuela situation plays out, and gold and silver making new record highs. And this does come as Fed Chair Powell faces a criminal investigation. So analysts are trying to decipher the current commodity cycle, and these cycles typically go through 4 or 5, and expansion sees rising demand outpacing supply, pushing prices higher. The peak brings maximum prices with volatility, followed by contraction where excess supply causes declines. Well, joining me here at the New York Stock Exchange to weigh in is Jeff Gitterman, Managing Director at Gitterman Asset Management. Jeff, good morning. Thank you so much for joining me.
Thanks for having me.
On this Monday morning, we're looking at gold and silver hitting new record highs. But then when we take a look at commodities, we know when it comes to precious metals, there are different dynamics at play and supply and demand as well. So first and foremost, break down what we're seeing right now and why.
So we typically have had these long kind of super cycles with commodities. Sometimes they last up to 25 years. Sometimes bull markets run 6 to 11. Bear markets run up to 15 years sometimes. And these super cycles have really been limited to the supply-demand equation. So all of a sudden we get into a place where we don't have enough supply, we start rebuilding up demand cycle, we start building up manufacturing, mining, whatever it might be. These things take years, so they're not really short-term turnarounds. But by the time the cycle catches up, now we're producing too much and the price craters, and now we have a bear market cycle. What's different in this market that is completely new for us is that there's these themes that we're tracking: deglobalization, decarbonization, de-dollarization. All of these themes are creating global security issues that are now driving commodity plays. So all of a sudden, it's not just price, it's global security issues. That's a totally different game changer. It's almost like investors are playing checkers and the administration is playing chess. And if we're really going to see through these commodity cycles, we have to start playing chess as well.
Yeah, you bring up an important point here, because when we look at commodities as a whole, it's not just precious metals, it's also copper as well, and oil, and other parts of the oil sector as well. So do you think that we're looking at a real long-term commodity cycle right now?
I definitely think we're looking at a new super cycle. The problem is that the way most investors can allocate towards commodities is baskets. I mean, you can do gold and silver and some metals separate, but really to get exposure, most investors buy a basket of commodities. Oil's a big part of that. Oil is not having a great run, while metals are having a great run. Even food prices, we've seen cocoa and olive oil go skyrocketing, coffee as well. So the question is, how as investors do we start looking for the separation on these? I don't know. We don't want to be long oil for sure. We still think there's a lot of issues that are bearish against the oil markets right now, even with Venezuela. I mean, that is a huge factor, because all of a sudden we're driving another $4 billion worth of oil into the market that we didn't have access to before. It's going to drive oil down. We're looking really at metals and what it needs to keep the AI race going, and decarbonization. What does it look like with the electrification of the world? What kind of metals are needed? We need copper, we need silver, we need platinum, we need palladium, we need all of these metals. And we're playing chess with China, because China has already started years ago limiting access and controlling the market on these metals. I mean, you could take a step back and you could say, are we trying to control Venezuelan oil as a play against China so that they don't hold back the metals that we need to keep producing the AI race that we're in the middle of? So there's a lot going on behind the scenes, but I think we're in the early innings of commodity super cycle. We've got to keep the dollar down in order to pay the deficit. So gold, I imagine, will hit 5,000 in the first quarter on gold. So there's a lot going on and a lot of opportunity for investors to make money too.
Yeah, and you just highlighted the fact that when we're looking at commodities, it's not just precious metals or oil, it's also ags as well. And even when we're looking at gold or silver plays, there's also mining stocks or other ways of investing in that class, looking at exploration companies as well. But I do want to ask you about supply security, and how does a focus on this actually change capital spending as well as valuation in commodities?
I mean, look, we're seems like the U.S. is going to go all in on making sure that we could win the AI race. So anything in that cycle that's connected to AI, any of the metals that are connected to it, any of the electrification of the grid, because in order to produce AI data centers, we need grid expansion. All of that, we have to almost step away from traditional supply-demand mentality and move to global security and say price at any cost if global security is the mantra. So all of a sudden, supply-demand isn't the equation that we have to go by. We have to go by the fact that we're in this race to win it, whether it's real or not. We have been convinced by the AI oligarchs that we have to fight this battle, we have to beat China. So supply-demand equation is out, price at any price for security is in.
And of course, I think we could have an entire 1 hour podcast on each of these commodities that we're talking about. But if volatility is the new normal, how should investors be looking at commodities?
I mean, you've got to be really careful. You know, you don't really want to go all in on one commodity and find out that you put all your eggs in one basket. But at the same time, owning the whole basket right now doesn't really make sense. So you've got to start looking at ETFs that maybe limit themselves to just metals, or ETFs that limit themselves to food ag, if you want to make a bet on food ag. But for the average investor, it's a tough haul. I mean, the best thing is to find an expert, work with an advisor that knows the space, because this space is incredibly volatile. In the middle of super cycles, you could have a bear market run in the middle of a bull super cycle. So you can't just put all your chips in one sector and hope for the best right now. You've got to really be on top of it.
Yeah, and Jeff, it's hard to believe we're only kicking off the second full trading week of 2026 with everything that has happened. So obviously there's so much noise. So how are you separating the signal from the noise?
Yeah, I think our point of view is this is a long cycle where we're going to own the resources that we need to continue to build out our grid and continue to fight an AI race. We're not going to let another country win. And we've got an administration that doesn't seem to be restricted by the current rules of law or diplomacy that might have restricted that access. Now that could run against you too, because all of a sudden we don't have any access and prices driving up, and all of a sudden you wake up the next morning and we now own Greenland and we now have access to all these resources to prices plummet. So you've really got to be on top of this, and you've got to watch the news cycle. And that's why 2 weeks seems like a year already, because this news cycle, I mean, growing up in the markets, this news cycle seems like a decade of news cycle in 2 weeks. So very hard to keep up. But things around gold, silver, probably going to run for a while with the risks that we're seeing in the global marketplace.
Well, Jeff, always great talking to you. Thank you so much for breaking all of this down. And as always, thank you so much for sharing all of your insights.
Thanks for having me.